Hello ladies and gentlemen, and welcome back to another video. Today's a pretty cool one and it marks a pretty nice milestone for me, which is a 1 to 200 risk reward trade. I sound stupid saying that because it's such a bold and grand claim, and to be able to achieve risk reward like that is, even I'm in admiration of what is possible when you are trading with the right concepts. But I want to give you guys a full breakdown from the high time frame down to the lower time frame, so you guys can see how it is definitely possible. And these kind of trades are something our students are doing on a daily basis. If you follow us on Instagram, you'll see our students posting 1 to 10, 1 to 20, 1 to 50, 1 to 100 trades on a daily basis. Late in last year, around summer of 2020, I caught a nice buy on gold with that entire bull run, essentially, where I caught around 4,500 pips, which is also documented on our Instagram. And then this year, I've already given a full breakdown and explanation on the initial sell of gold, which is actually floating 1 to 230 as of today. And I've given a full breakdown and case study of that already on Instagram. I will be giving a brief outline of that today also, and how it is derived with structure and how that was designed to be a swing trade. However, today's trade was not designed to be a swing trade. It was more derived from an intraday play, and I want you guys to realize when you are trading intraday, there's certain perspectives and components you need to consider. So in this case study, market was in some sort of consolidation, and by consolidation I mean that the bullish and bearish composite operator were both in a lock, and they were both within a range where they were playing chess. There was a battle of supply and demand, and both of their plays were manifesting. So I could see the bullish composite operators play lining up, and conversely I could also see the bearish composite operators play lining up. So my job therefore is to find justified entries for both scenarios, where I'm trading with the bullish composite operator, looking at bullish intent and trading accordingly and breaking even as soon as I can. And then the same I was doing for the sell, and in this case I bought first and then I sold as a hedge. That sell played out to be a swing trade. So it was an intraday converted into a swing trade, and the buy that I took hit break even. So it's a whole dynamic play where you're understanding interactions within the market as opposed to pressing buy or sell and hoping it's going to be a swing. You're trading a bit more intelligently, and that's what we should be doing. We should be looking at the markets in a more holistic way, where we are enabling to understand both buyers and sellers' control and position in the market, and then we react accordingly. We do not speculate and forecast months in advance. That's not our job. Our job is to react to live price action, and that is exactly what I did in this trade, and now it is floating a phenomenal risk reward. So I want to give you guys a full breakdown so you get to see exactly what I was thinking, the thought process I was going through to be able to capture certain trades. So yeah, this will be a pretty interesting video, so let's get into it. So ladies and gentlemen, let's get right into it. Before we begin, I do want to say that trades like this come with a lot of skepticism and a lot of disbelief, especially if you are fixated on your way of trading and you're accustomed and used to trading with a 30 to 50 pip stop loss. You're only used to trading the daily 4-hour, 15-minute time frame, and anything below the 15-minute time frame is derived as noise for you. Then yeah, come in here with an open mind, because I'm going to be showing you exactly breaking down to the lower time frames, and you should be able to logically see through a process of elimination why I am not using fibs, why I'm not using support and resistance, why I'm not using trend lines. And then you'll also be able to see my stop loss is derived as a point of complete invalidation of a trade bias as opposed to a statistical point of reference, meaning I don't have a stop loss based on a dynamic trend line or a dynamic support and resistance level, or I don't have my stop loss based on a dynamic fib level, which is more so a range as opposed to a pip perfect point. For me, the way we read the markets is that I need to have my stop loss to mean that if it goes even 1 pipette above my stop loss, that trade bias is invalid. So therefore the stop loss plays an exact part. Same goes for the entry. My entry is not based on a 4-hour close of a certain type of evening star candle formation. It's not derived on things like that which are lagging. It's actually derived with complete precision, knowing that exactly here is my entry and exactly here is my invalidation. Let's get right into the video. So here on my screen you see the daily time frame, and very clearly you can see this is the trade I was speaking about in the introduction, which was my trade where I caught pretty much the majority of a bull run. It was a very nice risk reward trade. The pip count was phenomenal. I didn't max out all the way at the top. I got out a little bit earlier. This is another trade that's completely broken down upon our Instagram. It is a reaccumulation with a fractal accumulation. So there's a complete case study upon that. Very high risk reward trade also on this, and with a nice pip count as well. So these are 2 case studies that are already posted, and I encourage you all to look into. Now, when I focus on this segment in price, So without doubt, you can clearly see we're in a downtrend. Now on the daily, my structural point is all the way down here. So this is not a daily low, but we can see through the pushes, maybe on the 4-hour and 1-hour time frame, you can very clearly see that structure is forming a low here on the 4-hour time frame. We definitely had a BOS relative to these areas. And then we had a lower high, lower low, lower high, lower low. This one here actually should be blue. The blue ones signify to me internal structure. Now, structural points are obviously areas that led to new lows and highs and new swing points in the market. And areas within, for example, we have this push down, and internal structure, it might be bullish, it might be bearish. For example, from this lower low to this lower high, we are temporarily bullish. These blue points are signifying to be bullish internal market structure. However, that does not mean we are in a bullish market. So it's very important to understand your multi-time frame analysis and actually look at structure objectively on each time frame to add to a case. To imagine you're a lawyer and you're presenting your case in court, you need to specify evidences. So I will say, for example, daily we are bearish, 4-hour we are bearish, 1-hour we might be bullish. So what does that exactly mean to me? So this is exactly what I'm doing. I'm building a case for you guys. So we know that daily is very clearly bearish, where we can see by our impulses and retracements. And the most significant area which I'm more focused in is the recent price action. This sell over here, which has already been broken down upon our Instagram, this is actually a very high risk to reward trade. And I'm actually, because it was designed to be a swing trade, I was holding a lot more volume. Whereas this one, it was not designed to be a swing trade. It was derived as an intraday perspective. Therefore, trade management is completely different. But if I jump into the 4-hour time frame so you can get a brief overview of both trades and how I capitalized upon them, we can see that, first of all, I need to look at my structural legs. So I know that this area over here led to a new low relative to this previous lower low. So I know that the market from this area of price has formed a new low in a bearish market. Therefore, I am focused on this leg and everything that's happened after that. So I know that I'm in a bearish market. I've formulated a new low, and then internal structure is bullish leading up to my supply zone that led to that new low. Now, logically speaking, when price comes back, it cannot go higher than this previous lower high, because then it would be invalidated as a bearish market and therefore a bearish trade. So I would no longer be looking for sells necessarily. So I know that this sell that I took here, the logical place would be to make a new low. Therefore, I'm going to be holding volume. Obviously, I'm monitoring price action along the way to confirm to me, is it going to reverse? Am I seeing a reaccumulation? Am I seeing a redistribution? Am I seeing an accumulation playing out? It's telling me how to manage my trading accordingly. But from a macro perspective, I know that I want to hold volume, because the logical place for price to go is to formulate a new lower low. And looking back, that's exactly what it did. Now, I don't want to break this down entirely because there already has been a case study posted on this, but let's just jump into it very briefly. If we look at it from the 3-minute time frame, reason being it's not going to let me jump any lower, because quite a bit of time has passed, and TradingView does not hold the data for more than 1,000 candles per time frame, even if you have the Pro package. But this trade was actually taken upon the 30-second time frame, and I have screenshots of that on my feed and obviously posted to the students in the community Discord. But takeaway points are, first of all, I have a 4-hour supply zone, that area that led to the new low in my bearish market. It's a price reversal zone, it's a structural point, it's a point of interest, it's a supply zone. All of this tells me that I should be looking for sells in that area. Now, my goal is not to simply look at 4-hour zones or daily zones, because that lacks precision also. I need to refine my points of interest further. And again, this is already documented on our Instagram, so go ahead and backtest and explore that. But just to summarize, these 2 red lines over here signified a box for me, where this is my precise zone of reversal within my 4-hour zone, which is the entire red box. This area over here, this concise 10 to 15 pip range, about 13 pips, this 13 pip range on gold was exactly where I was preferring to see a sell reaction from. Now, I'm not going to set a limit and hope for the best. I want my lower time frame confirmations, because leading into it, we know that price was bullish. That internal bullish structure, which I marked in blue, that is showing me we are coming in with bullish intent into a supply zone. I would like to have further confirmation. So I can't go too much into detail on YouTube, because that would be unfair on our students, but this is a form of our lower time frame refinements within the WWA model. And just to give you a bit of insight, we saw that there was rejection. I lined it up with my points of interest rejection. We came to my points of interest over here, that red box I spoke about from here to here. And then we had a rejection on the lower time frame. It correlated nicely with the session timings I like to use and how they are specified. And then I clearly saw the bearish composite operator starting to take control, especially when it comes to factors of structure and order flow. So that summarizes that one. Again, I do not need to have my stop loss all the way over here within my 4-hour zone. Why? Because my stop loss was actually within this area based on that refined zone that I had. But once I have confirmed my rejection and I've used my lower time frame confirmations within that, I know that my stop loss therefore does not need to be on the zone either, because the zone has already served its purpose. I've had that mitigation of my points of interest refinement, and therefore I am playing the reaction. Therefore my stop loss is only required to be of the reaction zone, therefore formulating a new point of interest for me. Therefore my point of interest was not this area anymore, it was actually specified to be this area. And that is actually what formulated my entry. Again, it is on our Instagram, it's on the 30-second time frame, and that summarizes that trade. And again, when you zoom out and look at the macro perspective, where is price logically wanting to go? We know that I've already refined my points of interest. We're in a bearish market. We are forming daily lows and we are forming 4-hour lows. And I know that this sell over here, we can see with that strong bearish candle that has come in, we can see the imbalances. We can see the intent from the bearish composite operator. Therefore, it's telling me it's a successful rejection. We have taken out relative structure here, here, here. And then this is my next relative demand zone. Obviously, therefore, to monitor and manage this trade, I need to be looking at how price reacts in the next demand zone. So as price approached that demand zone, we blew right through it. There was no lower time frame rejection. There was no fractal accumulation. There was no reason for me to say I need to get out of this trade. Of course, I have my break-even protocol, so I was break-even a long time ago. But now that I've taken out my demand zone, I've taken out a previous structural point, I've definitely entered a bearish market within this. Therefore, I know that the next place for me to logically hold is to form a new low in the market. And that's exactly what I did. And again, there's nothing complicated about it. I'm just using the lower time frames with higher time frame points of interest, lower time frame fractal refinements to get an entry, break even when it's possible, and then that's how you consistently can get a sub 15 pip stop loss. In this case, about 12 pips. On Euro USD, for the last 6 months, my average stop loss has been sub 5 pips consistently on every trade I've taken on Euro USD. So that just goes to show, if you're having a 30, 40, 50 pip stop loss trading the 4-hour time frame, there's more things you need to look into. There's more backtesting you need to do, and you need to be a bit more curious and inquisitive on the nature of price by looking into the 1-minute time frame and reading price action. Again, a little tip that I like to do is earlier on in my journey, I would actually sit and watch London session and New York session on the 1-minute time frame, and I wouldn't take a trade. I wouldn't map anything out. I wouldn't make predictions. I would just consume price action to see the nature of it. And then later on, as I developed, I asked myself questions. I backtested with intent. And then that's how I started to get familiar with the lower time frames. But I don't want to go too much into detail on that. The trade I want to talk about today is the second entry that I got. So once we have formed the low in the market, which is over here, we formed a new low derived from my supply zone over here. We've had a conclusive push down. Then we form a lower high. So at this point, I know that I am in a bearish market. That daily and 4-hour narrative was bearish to me, and now 1 hour was bullish. Leading into it, we're having higher highs and higher lows, higher highs, lower low, lower high, lower low. So I can see now the nature of price action has now converted on the 4-hour, which is now still bearish, but the 1 hour has now converted from bullish to bearish. So I know that game is on. I'm in a bearish market once again. I'm trading with the trend, therefore I am trading as a swing trade. And I know that if I want to manage this trade correctly, I need to monitor to see how I'm going to be exiting or taking partials potentially, and if I can find possibility of re-entering, which is exactly what this case study is about. Now, when you're trading intraday, there's multiple things that can happen. So I want to investigate that further with you guys. So we know now, I've given you a macro perspective of where we are in price action, and now we can start to see exactly what is going on. So let's disregard the previous trade. We're letting that run, and I'm going to be not taking partials unless I see a reason to, until it's formed a new low on the daily and 4-hour time frame. Now, as we did previously, let's look at our relevant legs. So we know that this area here, this structural point, led to my low. This is therefore a bearish leg, low relative to my previous structural low. So we had a lower low, a lower high, and then a lower low. This signifies to me one single push on maybe the 1 hour time frame. Obviously on the 15-minute time frame, which we are on, there's actually a lot more structure and internal stuff that is going on. But just to give you an outline, yes, we have our supply zone, but to characterize a correct point of interest, do I look at this whole zone as a point of interest? How do I derive a supply zone? Well, I need to be a bit more intelligent and refining it a bit more precisely. So reading into the nature of price action, I need to see what is the story that is being built. We have this clear extreme that led to the low, but we also have various decisional points of interest before that true intent came and we had that true break of structure. So I need to know that somewhere between here and here, there is a relative or there is a significant point for me. Over here, we have bearish order flow. That's something we teach in the boot camps. I won't go into it now, but you can see that there is healthy price action, which is favoring the composite operator. And you can see that through forms of mitigations. And you can see that from structure, you can see that bearish composite operator is lining up, is gearing up their liquidity and orders, and it is forming and correlating their bias to therefore have that push. So here it was building liquidity. It was putting those orders in. We have that healthy order flow price action, and then we get that break. And then we form a BOS relative to this demand zone that made this high, and then overall it's part of this leg. So to summarize, I am not going to be regarding the extreme. I am not going to be regarding the order flow area. Reason for that is because that is healthy price action. And even though if price comes over here, it is still bearish because it has not taken out structure, but it tells me something else when it comes to intent. And that's what I need to read into. If price is going to be coming over here, it takes out my order flow. So therefore intent has changed. So I know that I'm going to be looking in these areas more specifically. Now, again, I'm not going to be setting limits. I'm just monitoring price action. So when we form this lower low, I can expect price to be temporarily bullish, to come back and to form that lower high. So I am temporarily bullish in a bearish market. Now, this is my temporary bullish price action, higher high, higher low. We have equal lows over here, liquidity formed, that liquidity was taken, that now gave price or enabled price to form a new high. And then we had higher low, higher high, higher low, and now we are forming this base. This base for me, again, is very clearly liquidity. And now we have liquidity to the high side over here. When price is at equilibrium like this, or when price is consolidating, this is something we touch upon in the Waqar series in YouTube, and also something we go into in depth in the bootcamp. When price is in correlation like this is choppy or messy price action, as people refer to. This is not meaningless price action. This is very meaningful price action because there is so much that happens in these areas that lead to expansions. Consolidative zones lead to expansion. So I know that if price is consolidating over here, that means the bullish and bearish composite operator are both in equilibrium and they are playing their hands at chess. They are putting in their orders, they're having plays on liquidity to see who is in control. At this point, nobody knows who is in control, but they are having it out. They are having a battle to see who is in control. That's why we can see caps and we can see traditional resistance and traditional support. We have found a range where price is trapped, and now we need to see new participants come into the market to break that equilibrium, be it new liquidity from the sell side, new liquidity from the buy side, or parties being taken out. And that's what obviously liquidity players are. So as we come into here, I'm reading this as a distribution because I'm seeing my up thrust after distribution, this liquidity being formed, and then we have this test that leads to the BOS. Again, this is not a trade I got in, but this is now building to my narrative. It didn't take out the bearish order flow, so it did not break intent. It came to a supply zone, and then what did it do? It took out my liquidity, it hit my supply zone, it gave me a fair mitigation, and then price came lower, and we have that base where liquidity is lying, liquidity obviously being a target because liquidity drives price. Now, when we have that base being formed, price comes back up, it tests something on the lower time frame, it's a 5-minute decisional point. We have that test, we have that mitigation, and now we have intent coming into the market where we have taken out structure. So we convert from a bullish market where this is my structural point to now structure being taken out. We are in a bearish market once again. So I can see there is a change in character where 15-minute time frame is now lining up with my bias, where we have a fractal distribution over here. We have a fractal distribution over here. Actually, let's Just want to make it a bit more clear for you guys so you know. Distro. Okay, show for distribution, and let's put that. Okay, so we have our fractal distribution happening now. That fractal distribution has now given its play. We have now had a bearish leg derived from my fractal distribution. So now we know from our test to this base, we have now come to my demand zone. Now we need to read into price action, because once again, we do not have a composite operator that is in control. Distribution does not necessarily mean bearish market. Distribution is a form of the bearish composite operator converting converting demand, so bullish market. This demand has now been converted into supply. So we can anticipate a bearish leg, but what if price comes into a demand zone and then the bullish composite operator once again takes control? So now we need to investigate further that in this demand zone, this is a demand zone specifically why, as I previously mentioned, this area took out liquidity. We had new participants entering the market that drove price to form this aggressive push up and make a new high. So I know that this is a very strong demand zone, and as this bearish leg comes into my demand zone, I need to be monitoring a bit more, and that's what I was doing. So now we have my bullish narrative, which is my bullish narrative being this demand zone that took out, there's a play on liquidity that formed a new high. I know that this is a demand zone. Price is coming into that demand zone. Let's see how it's reacting within there. So this is where things get a bit complicated and interesting, and this is where my intraday narrative comes in, and this is where the complex trading comes in, and this is where you need to be a bit more of an intelligent analyst. So I know I have my distribution and the bearish leg coming in, but I also have my strong demand zone. So now we are facing another equilibrium where the buyers and sellers are now going to see who is in control. We're going to have plays in liquidity, we're going to have plays in structure, we're going to have plays in supply and demand to see who is in control and which directional bias the market is going to play in. So we were trending bearish with our lower lows and lower highs. We hit our demand zone, and then let's focus on the details. It's gone right into the 1 minute time frame. Remember, the lower time frame does not present noise. There is a lot of information and detail over here. So let's pay attention, and hopefully you guys can pick up on some nuggets. We come into my demand zone, we tap in, and we have that mitigation, and then we come with intent. First of all, this is not direct intent because this is my supply zone and we have internal bullish structure, but we hit the supply zone, it does not blast through. So we know that this can be condensed a little bit further. If I come to the 5 minute time frame, you'll see exactly what I mean. We can say this area led to my BOS. This area led to my BOS. I know that this low formulated this push up, but where actually were the buyers actually in control? The buyers were trending bullish a little bit, but they did not have a bullish break of structure. So therefore they were building up their liquidity. That's why I've written bullish order flow. They are building up their liquidity. They are having their mitigations. They are building in their orders. And then we have that area, this area right here, that led to that strong push. So we know that price, the real demand came from this area. So I know that my original zone, okay, my original zone over here, that H1 demand, that has now led to a BOS. Now that BOS is also narrowed down to this point of interest because this area was the true one that took out structure. So even though price originated from here, I know that the true buyers took control at this point to then have that clean break of structure. So I know that this area is where I'm going to be interested in. And obviously I can refine that further, but I won't be doing that right now with you guys on YouTube. Now, we have that push up, we form a high in the market. So we've had a higher high now, we've converted, we've had a chaining character, and then we form a higher low, but this is internal structure for me now because this did not lead to a high. This is internal structure right now. We are trending with our internal structure. Price taps into my demand zone and finally forms that lower high. So this now is my higher high, and this is my higher low. Internal structure leading into it, and I want to see how price reacts from that demand zone. Hopefully you guys are following, but you can see this is my demand zone that led to the BOS. Price came into it, and this is my higher high, this is my higher low. This is now the base in the market. Price should not come lower than here if the bullish narrative is playing, but we have our H1 zone led to a strong reaction, and then we have our demand zone within that led to a reaction. Let's see what that reaction was. Let's zoom in on it. So we are building a case now. I'm not jumping in a trade yet. I am monitoring price action to see what narrative is playing out. But I can see that buyers are taking control because we are having that bullish intent playing out. Once again, we formed that higher low in the market, and then we have internal structure building. We have that healthy price action building. We have that bullish order flow with that bullish composite operator building its orders in. And what happens? Exactly the same as before. We have bullish order flow, and then we have this area that took out structure. So now we took out that internal structure, and now we've had a BOS. Once again, BOS being obviously break of structure. So I can see now this demand zone was the one that was responsible for this high in the market. Let's mark that out. We can put that in green. So now we know we are in a bearish market once again. Sorry, bullish market once again. And now I need to see if I'm looking for a buy, where will that be from? That will be from my demand zone. Again, not structure, because this is now formulating intent. This is the third time in this case study where the exact thing has played out or demonstrated that we don't need to necessarily look at structural and supply or demand zones, but it's actually looking at the intent that is within. So we have this bullish order flow zone, and then we have this demand zone that led to my high. So I know that this is the area I want to be monitoring. Now when we come into the M1 time frame, same thing once again. We are having that healthy bearish order flow, and then we have this low coming into it. We're having a bearish internal structure, and then we come to my demand zone, M5 demand zone, which I previously mentioned for you guys. Same things happening again and again on a daily basis in the market, rinse and repeat. We have that liquidity base forming previous to my demand zone. Price comes into my demand zone, clears that liquidity, comes with a strong reaction. Beautiful textbook stuff. And then again, the lower time frame entry, which I can't cover with you guys exactly right now, but this therefore becomes for me an intraday play. Now, what am I looking at? If I zoom out, what is my narrative? My narrative is I know I'm in a bearish market. I know that because the higher time frame is telling me I'm in a bearish market. But if I can see this demand zone that led to this high, this therefore I know this is where buys can potentially come from. I also know that when price came into that demand zone, what happened? Well, we had a strong push up. So I know that if I'm entering a temporary bullish market, I'm not overall bullish. It's temporary, therefore it's intraday, or I know it's counter trend. This is a heavily counter trend trade, but we are taking it with right justifications, with right exit protocols. So I know that if I take a buy over here, my first immediate target is my structure, because I know that if we're following internal structure, I know that this is a first target for me, but I know that where can price come to? It can come to test my previous test to form my last point of supply of my distribution. So my immediate target was firstly form a high, and then second is to come to my next supply zone. Very logical. That in the end did not fulfill because we actually saw the converse playing out. So that was the bullish play playing out. Let's talk about the bearish play. We have that fractal distribution. Where has the fractal distribution come from? It's come from my decisional supply zone post bearish order flow as part of a bearish impulse from red to red. We know that that was our 1 hour and 4 hour leg. Price has tapped into my decisional. We've had a fractal distribution, and then we are forming lower lows and lower highs. So I know that the bearish composite operator is definitely present as well as the bullish composite operator. So now let's look into it a little bit more on the lower time frame. So I ran through with you guys the entire bullish narrative. Let's look into the bearish narrative. So at this point, I'm already in the buy. I'm break even because I have my break even protocol. I have my entry protocol. Everything's set and in play, and it's floating pretty nicely. When it reaches my sell zone, it was a 1 to 6 or 1 to 7 approximately. Now, my sell zone, what is that? Same thing that's happening again. Again, I can't touch too much upon it, what it is exactly, but we have our bearish order flow zone once again. And then that bearish order flow, we have the same thing that's playing with this liquidity play over here. That derives my supply zone, and therefore this becomes my entry over here. Now, when it comes to invalidation, it's very simple. Once again, it's not based on fibs. It's not based on anything subjective. It's based on concrete points of invalidation. So let me show you guys quickly what I sent into the students on Discord. Okay, right here I gave a full explanation of my buy. Again, this is before it's happened, and I can actually show you this is the buy that I took. This buy was exactly what I've broken down for you guys right now, where we tapped into our demand zone, we had that intent, and my immediate targets were my sell zones. Now, that is the buy in play, and I've given the full justifications for that. Now, the sell, as you can see from my Owanda feed, we can see this is my logic building into it, and I know that on the 1 minute time frame, On the 1 minute time frame, I've given the exact invalidation point, which is over here. That invalidation point was not hit. So I was comfortably in this trade, and even though it's a very tight stop loss, again, once again, sub 15 pip stop loss on gold is a very, very small stop loss to have. But again, there's no reason for price to come higher because I have that bearish order flow zone, and price should not come above that because of the intense reasons I spoke about earlier. So therefore, I'm in a buy, and I'm in a sell. The buy comes to break even, but the sell is now in profit, and the sell is obviously, the risk has been removed because I've moved my stop loss to break even, and now I'm doing a swing trade with it once again. And here's the entry of that, where we can see that buy was right over here. The buy was from here to here intraday. Then the sellers prevailed, and then price tanked. Why? Because buyers and sellers were in equilibrium. They were gearing up. They were both playing their hands. We were having plays on liquidity. We were having plays on supply and demand. We were having plays on structure. And then who played out in power in the end? It was the bearish composite operator. So let's speak about that a little bit more in detail. But in one day, in an intraday play, right here, it maxed out at 1 to 62 risk to reward within an intraday play. And if we go to how price later played out, this is what happened later on. So this is that entry right over here. When you come onto the daily time frame, you can barely notice what's going on. And that original play I quickly broke down for you guys. Again, the full case study is on Instagram, but lower low, lower high, I can anticipate a new lower low. That new lower low has now been formed, with first entry over here being 230 risk reward. The second entry over here also being a 1 to 200 risk to reward. And again, when you look at it on the higher time frame, the daily, a new low is very obvious. And then when we go into the lower time frames, it's very easy to see why my stop loss was where it was and why my entry was where it was as well. So we can start to see we're not doing anything mystical or magical. We are not trading recklessly. We are not taking 20, 30 losses or even 5, 6 losses in a row. We have our protocols. We have our methodology. We know that we have objective criteria. We know that we are not going to be randomly hitting sells. Within the WWA model, we only have 2 points of interest. Therefore, for a certain directional bias or for a certain trade, you should not be taking more than 2 losses. And again, that is also rare because within those 2 points of interest, we have our lower time frame refinements. So it is quite rare to see both zones giving valid lower time frame refinements and therefore valid entries, and then both hitting stop loss without the break-even protocol being in play. That is quite rare. So when it comes to that common question of, oh yeah, you catch a 1 to 200, but how many losses did you take? Well, you'll be quite surprised because within the community also, not just us, but the students too, they are taking very similar trades and they have that same refined points of interest, and there's not 6 or 7 of them. There's 1 or 2, and they have the lower time frame protocols also. So you're not just randomly jumping into those 2 points. You're intelligently refining them. Now, let's zoom out once again and let's look at the 15-minute time frame. So I am also obviously originally in that first sell. And I can see that, well, if this is my low in the market, this is my lower low, and therefore this is my newly formed lower high derived from my distribution. So we have this impulse, bearish impulse, lower high, fractal distribution, and then bearish BOS and bearish price action prevailing. I know that my immediate target is to come to this structural point, and therefore that is my immediate intraday target. But when I zoom out, once again, I know that that is only part of a smaller picture. This is only this leg over here, and then this retracement, this low over here is part of a smaller time frame bearish structure. So I know that this is my immediate intraday target, but if I zoom out once again to the 4 hour, you can see that where is my logical target? Well, I know that I want to take out this this area of price over here, this lower low, because I am now within this impulse over here. So I know that my intraday target is over here, but because I'm with trend, I am in no rush to take volume off. I am in no rush to get into buys because it's not logical. So I'm not going to be taking volume off over here randomly. I know I am with trend now. I know that as this trade is chasing a new low on the higher time frame, as is this trade, and that's exactly what I was waiting for. All I need to do is monitor price action in this area over here to see if there's rejection, to see if there's an accumulation, to see if buyers are now entering the market or if that new low is going to actually prevail. Now let's quickly forward price action. Okay, so we can see that price came into my take profit area, and what did it do? It came all the way and it took it out. You can see it's actually refined over here. So my area is here. Price took it out. So we've actually officially formed a new low. Obviously, when you form a new low, there's new participants in the market. Sellers are taking profit. Buyers have now been incentivized to come in because it's taken out liquidity of the previous swing point. And obviously, it's a lower price point. So therefore, new participants enter. That's why you have a strong retracement. But that is still fine for me. Why? Because I know I am with trend and everything is going smoothly. So there's nothing to worry about here. Here, obviously, I took volume off because this was my immediate target. So on both trades now, I take 50% volume off, and I have no reason to fully close out because I'm not seeing a buy signal. So I know that I take my partials over here, and therefore I'm holding full volume until my next lower low. So this was 162 risk reward, take partials, secure 80%, and then this one over here, same thing. I have no reasons to take partials anywhere else. There was no buy signal. There was no reversal. I'm just trading logically with price action. Therefore, I'm holding that intraday 1 to 62 that I mentioned. Once I had the new low form, now I don't have a buy opportunity, but I take volume off the table. And then I know that the remaining volume that is there within my entries, I am with trend. I'm with the daily. I'm pro trend daily, pro trend 4 hour, and my stop losses are at break even, and I'm trading with logical price action. Therefore, I'm just going to hold and see what the market gives me. And over the coming days, price did exactly that, forming lower lows, lower highs. And here there was multiple entries also, not ones that I took, but a couple of students took very nice entries intraday in these areas and in these areas, which I won't cover in today's video, but that hopefully summarizes for you guys exactly how I was able to catch 1 to 200 risk reward trades, both with full breakdown, both with full justification. And hopefully, I encourage you to watch this video a few times, because I know, especially if you're new to these concepts and you're new to trading the M1 time frame, it might have gone straight over your head, especially if you don't know how to restructure correctly, if you don't know what liquidity is, if you don't know what internal structure is, if you don't know what fractal distributions are, and a few things that I haven't even touched upon in this video, which we go into depth with our students in the boot camps. Once you combine all of these things together, you will start to see this was very, very logical and quite simplistic. There was no crazy complex things going on. There was no huge risk. There was no gambling involved. There was not hoping for the best. There was not great speculation. I'm just trading precise zones with lower time frame refinements and having justified entries, breaking even when possible, stop losses at zones of invalidation. They're not stop losses for the sake of precision. They're not stop losses for the flex of a risk reward. The stop losses are there to protect your capital. The stop losses are therefore to do what? Tell you where price and trade is invalidated. If price even goes 1 pip above, you should be out of the market because that trade is invalid. Therefore, your stop losses don't need to be 30 pips to give breathing room, or it does not need to be based on a supply zone or a resistance zone or a dynamic trend line. Your stop loss is pip perfect, because you know if price goes even a little bit above that, it is invalid. So stop loss justified, entry justified, directional bias fully justified from swing point and intraday, and both giving phenomenal risk reward. I'm also going to be doing a full case study of this second trade on Instagram. So if you want to follow us at WWA Trading on Instagram, you'll see a full case study of both of these trades over there. Same thing going on, but in a bit more detail, where you can see the higher time frame, daily, 4 hour, 1 hour, M15, and then M1 time frame with the entry and stop loss, everything considered. Obviously, the full breakdown and the full justifications have been documented for the students within the community, but that should summarize that entire trade. Again, for me, one of my personal best trades, because I was anticipating all of this from entries, and it played out exactly how I desired, and it gave me phenomenal returns, which I am in complete awe and admiration of. And this is something that students have also achieved. You know, these 1 to 50 and 1 to 100 trades. This is my first 1 to 200 trade, and I couldn't be happier. And yeah, what a way to start 2021. So yeah, guys, I hope you enjoyed that video. I hope you took some value. If you'd like to find a little bit more about our educational services, in the link below, you can actually book in a 30-minute free demo call or free discovery call with our student success manager. He is going to, in that call, make sure, first of all, you are eligible for our education. It's more interview based now. We don't just take on everybody. We need to be sure you are right for our education. And then also through that, he will explain the whole process of what we offer, what our boot camps entail, what kind of topics we cover, what kind of aftercare you will get, and explain the whole onboarding process as well. So go ahead and book in that call, and the student success manager will guide you through the whole process. And again, as I always mention, do your due diligence, especially in an industry like this, where there's a lot of scammers going on. There's a lot of false dreams. There's a lot of people selling hopes and aspirations of riches. That's not what we're about. We actually give you the truth that this is a journey. This is going to take you a long time, many hours, and you're going to have to do a lot of sacrifices, but it's worth it when you can take trades like this. So do your due diligence. Look into our Trustpilot reviews. We have close to 300 5-star verified student testimonials, each one being multiple paragraphs long, giving their full testimonial of how the experience was with the boot camps and with the aftercare and the trades or the trading strategy that we provide. Also look into our Instagram. Daily we post our student trades. These student trades are 1 to 10, 1 to 20, 1 to 50, 1 to 100 risk rewards posted by students on a daily basis. We show this on our Instagram stories. We also have student interviews on our YouTube channel where we bring on students who have 6-figure accounts. Some people have 7 figures assets under management. We bring on students who are FTMO funded. As it stands right now in the community, we have over 50 FTMO funded students, and for an educational company not even 1 year old, that's quite an amazing feat, I would, if I do say so myself. But yeah, within the community there's a lot of amazing things going on, so do your due diligence. Maybe reach out to some of the students, watch our interviews, look into WWA, look into our telegrams, backtest our trades and see if you can't understand why we have an entry where we have, why we had a stop loss where we said, and why we are able to get certain risk rewards, that means there's certainly things we can teach you. So backtest our telegrams, backtest our Instagram trades, backtest the things we post on our stories, backtest student trades that we are posting daily. And then you will start to, obviously, first of all, you will see results by just being inquisitive of our trades. You will start to pick little nuggets here and there and start to catch wind of what we are doing. But before you even consider joining WWA, we want to be sure you are joining us for the right reasons. Therefore, I encourage you all to do your due diligence first before booking a demo call with our student success manager, where he's going to guide you through the onboarding process. But that wraps up the video for today. I do hope you enjoyed it. It's a nice breakdown of 2 pretty amazing trades, and for me, personal best of 2021 and probably of my whole trading career so far. So yeah, I'll catch you guys in the next video, a next breakdown hopefully, with future trades that I'm taking. So I do hope you took some value, and yeah, let us know in the comments what you would like to see next. Catch you soon.